Let's take a live look at the big board. The Dow Jones is up 151 points right now. It is shrugging off any threats of a tariff and the tariff war that continues to play out across the country. The S&P 500 and the NASDAQ currently down, though. We're joined now by financial expert Jason Matthews to talk a little bit about the financial markets and what we're seeing here. Jason, we see the tariffs on China. That's going to be a big deal. Furniture products right now. But the markets aren't really reacting like we saw what happened on Friday. What you make of this?
The reason being is that the quarterly reports for corporations and banks came out today. So you saw earlier this morning, we had the market tanked. Then we heard great news from the banks about they did better than expectations, and then the market bounced back from that. So that's what we see today.
Should consumers take anything from the better than expected quarterly reports from banks? Is that good for them, or was it only good for the stock market? What is your take?
I say it's only good for the stock market.
Yeah.
It just means that they're still borrowing money. You can still they're still doing lending. You can borrow from it, but it does actually mean that it's actually good for the average consumer, especially when the cost of things are going up. That means you're just able to borrow more money to pay for all these expensive goods that we're starting to see more and more.
That's not necessarily a good thing, I would imagine, right?
Right, but if you got to get a car, you got to get a car or a truck. You try not to, but you definitely see those prices, being expensive, and interest rates. They dropped down a little bit on the Feds, but they haven't lowered it down for consumers for most things yet.
Wow, so you mean like for cars and mortgages and that type of thing and credit cards?
Correct. Correct. So credit cards are still high. They haven't dropped those. You see the drop on your savings accounts where they lower those immediately. But when it comes to borrowing, that's been a lot slower, or more of a hesitant seesaw that we're seeing right now.
So in this particular environment that we're in at this moment with these threats of tariffs and imposing of these tariffs, what are you advising your clients to do at this particular point, depending on, of course, in their situation?
Right. Depends on the situation. But what we're seeing is a lot of our clients are they like what's happening in the market, but everybody thinks that eventually is going to be some pullback, which we're already starting to see. And so we're just being a little bit more conservative. What we might do is protect our upsides that we have in the market. Like, we've been having this great run this year. Let's protect it by having different things that do downside protection, such as some type of options or some type of puts that can protect us on those downsides. Maybe we go back into fixed income to be a little bit more safer, especially if they get closer to retirement.
You said the return on savings is not as good right now. Is there a recommendation to put it somewhere else if you want to gain a little bit more on your money?
If you're trying to be safe right now, I would say is you want to keep 3 months worth of savings in your savings account and bank. But then after that, for safe money that you might not have access or touch towards it, there might be some other instruments such as bonds, as far as U.S. Treasuries, that might give you that safety that you still want. But that's a lot better than what the banks have to offer for you right now.
Hey, Jason, any other news coming out from the markets that you're going to be watching out for this week? Do you anticipate that eventually after today that you might see more of a rocky road tomorrow, even after these quarterly reports came out from the banks?
I think we're going to still see a rocky road for a while until we get this calmness of this terror war calms down between this battle of America and China. You're going to see a lot of volatility, rockiness. But then we hope that we're going to continue to hear great news that's going to happen in these quarterly reports. One big issue we're going to have to watch is NVIDIA right now, especially with the battle. They're probably the biggest company that's affected with this tariff wars. And that's been rising. A lot of the Magnificent Seven has been NVIDIA and this AI surge. And how does that come back with everything?
So that's been helping the markets a little bit, kind of offset some of the bad news that we're hearing. Is companies like NVIDIA, because I think they are doing work with Intel now. I mean, they really are doing really well. I think it's at one point the most valuable company in the world.
Right, the most valuable company in the world. They partnered with Intel and other companies, OpenAI, and that has helped out with the partnership. I think the one thing for the long term we have to watch out is this a potential bubble on the horizon?
Right, that's what
AI.
Is the AI one, because that's been talked about even for the last year or so, whether this whole, because there's a lot of investment going to these AI companies, AI startups, like OpenAI hasn't really turned a profit yet. So what really is the result? Will this eventually be able to make money? What's the big breakthrough? We haven't seen that yet, right?
Exactly. It's some people might say it looks like 98 right now, right?
I said the same thing just the other day. 98, the dot-com bubble.
Exactly, right? Yeah. There was a few winners, as we saw Amazon, but there was a lot of companies that got slaughtered and destroyed. The pet.coms, the food van companies, so on and so forth. Right?
I haven't heard those names in years.
For years, right?
Yeah.
And that's what usually happens is you have this new technology comes in. There might be a few winners, but there's going to be a lot of companies taking losses at the same time. So you got to be very careful of not jumping into AI when it's very sexy right now with this huge AI bubble that might be happening.
I know it's hard for people to believe, but Amazon was back then, and no one was like, Amazon, what's this? Now everybody knows what it is. No, exactly. Jason, thank you so much. Appreciate it.
Definitely. Thanks for having me.
All right.